Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, and that's powered by the best option scanners out there, rbtrader.com, and taking a look at a market that just really doesn't want to go down. We had Apple and Microsoft miss, certainly Apple with a guidance miss, Microsoft with just a bad number, but yet we see both these stocks down, but down significantly. The market down, but certainly not down for the count. So we're looking to see if we can break out of this range. Since beginning of February, we've been in this 4% trading range, bounded to the downside by 2040 on the S&P, to the upside by about 2120. So just this chop back and forth. We came close to breaking out a couple days ago, but that failed as well. So we're right back in the middle of that trading range. And I think played as such until further notice is this yin and yang. The easy money certainly putting a bid under stocks on any dips, and valuations putting now a cap. And now, given the fact that Apple certainly didn't beat the whisper number and Microsoft missed, and oil companies certainly will be coming in weak, we're looking at an S&P with over a 17 forward PE here. So not a cheap market, but interest rates near zero. You know, money is cheap. So this yin and yang, I think, will continue. How it plays out, anyone's guess. But I think buying dips by selling out of the money puts with this little lift in VIX that we've seen certainly might be a prudent play. Also taking a look, as we have been recently, at more opportunistic than tactical plays using those arbitrator scanners. Taking a look, level 3 LVLT had huge call volume 2 days ago in the August 60 calls. Over 22,000 contracts traded. His stock was up a little over $1. These 25 Delta calls, which should have been up about 25 cents, were up about 70 cents. Also, the puts, the August 55 puts, were actually up with the stock down. We took advantage of the fact that implied volatility went from kind of a mid-30 level where it had been to well over 40 to sell both sides of the market in a neutral fashion. We were literally, about 2 deltas long doing the trade. So selling the August 50 puts, like I said, that were up in price with the stock up, and selling those August 60 calls that were up almost as much as the stock, capturing about a 70-cent edge on a trade, that's worth about $1.05. So really have a very nice edge on this trade, to say the least. Again, just looking for that vol to realign here. We do have earnings coming out, but not for a while. So I think once that buyer dissipates, that will come back in line. We'll take the trade off and move on. So until further notice, I think this market certainly, has many befuddled here. We have not had a meaningful sell-off in several years, and we'll wait and see if we actually get one. What it will take, who knows? But until then, I think use these sell-offs. For example, Apple, we're looking at selling out of the money put spreads. Did this morning on the weeklies that expire Friday. The 122, 119 brought in about 60 cents. Apple popped since then, actually took it off for 23 cents. So did a scalp on a spread, just so the veracity, kind of that Apple move from the open till midday here. So I think buying dips here by selling out of the money puts is probably the way I would structure the trade, given the fact that the VIX did pop up a little bit here. So until next week, this is Tim Bigham. As always, and especially in this market environment, keep those position sizes in place and those stops going. Take care.